Okay, I'm Ken from the Ken Rigel Group, and on with us today, as always, Danielle Di Marco, co-owner of Mortgage Line. She's our preferred mortgage specialist. And on a day like today, the Bank of Canada cut interest rates, if you didn't hear, down to 4.5% earlier today. So on a day like today, it must be absolutely insane for you. And having people call you, oh, what's this going to do to my rate? What? And guys like me call you, ask you to do videos. So just tell us what a day like today looks like for you.
Yeah, for sure. It is crazy is a great word to describe it. I always love when you call though, so keep calling. Thank you.
Oh, sure,
Um,
yeah, no problem.
but yeah, we these days we know in advance when the Bank of Canada rate announcements are coming out. So to be honest with you, we try and leave our calendars as empty as possible because we know we're fielding phone calls, texts, and emails. Everybody wants to know, is my rate going down? Is my payment going down? Is my mortgage affected? And so, we kind of take the time to answer everybody as carefully as we can and as nicely as we can, just to make sure everybody understands. But yeah, the Bank of Canada rate announcement really only affects this many people.
And that's the crazy thing about this is that everybody is talking about it right now, and I mean everybody. But I was going to ask you about that. Like, what do you think the actual percentage of people it affects are? And then explain to everybody why it only affects a certain number of people.
Yeah, for sure. So really, it affects anybody with a variable rate. So lines of credit, credit cards obviously are slightly affected there, but revolving debt, anything revolving. So we don't even have to necessarily talk about mortgages too, but unsecured lines of credit. A lot of times people will go to the bank and take out a line of credit and do renovations or buy a car with it or whatnot. Those are on variable rates also. So anybody with a variable mortgage rate, but also any outside debt that's on a variable, those are the people that are going to be affected. So they'll see a little bit of relief again because rates dropped back in June by a quarter
Yes.
point.
Yep.
Then now we're seeing a quarter point today. So overall, if you have a $500,000 mortgage, just to kind of throw a random number out there, in June we saw about a $77 a month decrease in payments.
Okay.
And then now today, another 77. So 155-ish dollars a month in relief in the last 2 months for homeowners, which is kind of nice.
Well, that's a tank of gas.
It is.
Yeah.
That's sad that
Um,
that's a tank of gas, but yes, that is.
it is a tank of gas. Okay. So anything revolving, like, so even tell me right now, I don't even know, like, is the average line of credit, is it like prime plus what right now? Like, what are we looking at that it's come down from?
Yeah, for sure. So typically a home equity line, you're going to be about prime plus a half.
Okay.
So you would take your prime rate, you would add your 0.5%.
Got it.
So obviously having it come down a quarter point, you're going to see a quarter point decrease
Cool.
in your revolving debt.
Sure.
Unsecured lines, typically around prime plus 4%.
Yeah.
So that's obviously higher because they're not secured to anything, but same thing. Now we're down another quarter point on that. So you're going to see a little bit of relief in payments on your unsecured debt as well.
Okay. So on those revolving pieces of credit, that's what gets affected immediately by a rate cut. But how does a rate cut like this, how does it translate into fixed term mortgages or people that are in the or looking to get a new mortgage? How is it going to translate long term for those products?
Yeah, for sure. So anybody looking to get a mortgage, if you're looking and wanting a variable rate, obviously the lower the rate, the better for you.
Sure.
Not only from a payment perspective, but I mean from a qualifying perspective, because Bank of Canada, we introduced all this stress test stuff a few years ago. And so the higher the rate, the higher the stress test, the less you can spend on a new home. So as these rates start to come down, it will make the variable more affordable,
Mhm.
but also more appealing for buyers because they can still qualify. When that variable is so high, it's just almost even not an option that they can even consider because they just can't qualify for it. As far as fixed rates go, those are based on bond yields. And
Yeah.
so the bond yields are really what drive the fixed rates going up and going down. A lot of that is based on the US economy and their economic reports that get released as well. So really, we have seen bond yields come down and fixed rates have been slowly coming down. I was just chatting with a client this morning, funny enough. A year ago, they're almost 1% lower than where they were a year ago,
Right.
depending on what fixed rate you're asking for. So that's a pretty big decrease.
Yeah, absolutely it is. And so, okay, so it's that revolving credit type product, it's the variable rates, it's the lines of credit, those are immediately affected. The long term, the more the locked in debt, we'll call it. So like fixed rate mortgages, those are not directly affected by a rate cut like today. So that separates who's being
Correct.
affected and who isn't. Now, back in the COVID era, 1920, were variable rate mortgages not the flavor of the day? Wasn't everybody taking variable rate mortgages? And then all of a sudden they became unpopular because rates were starting to climb. Wasn't that what happened?
Yeah, and that's pretty typical. That's what we
For sure.
see. We see these cycles and rates. So we see, the last couple of months was like everybody wanted a 3-year.
Yeah.
And then now we're seeing 2 drops in the variables. So now we're hearing all about variable. So it goes through these little cycles depending on what rates are doing, which makes sense.
For sure.
As rates are coming down, people want the flexibility to have the lower rate.
Yep.
What happens is when rates start to come up and people are like, oh, I'm just going to hold on a little bit longer. I don't think this is going to last. And it goes up and it goes up and it goes up. And then you're kind of stuck riding out that higher variable. But for anybody that's done that, the relief is now coming. So don't lock into a fixed if you're in a variable. You already rode it all the way up.
Yeah.
You might
Yeah.
as well, ride it all the
Right.
way
Yeah.
down.
Yeah.
So, but yeah, I would say what people want really depends a lot on where rates are going, what's the media saying, what's the market saying, but also what can they afford? Right now, because the variable is still significantly higher than the fixed, that puts payments quite a bit higher for some people.
Okay.
And that puts houses out of price range. Like they just don't want to be paying that every month. So they'll still opt for a fixed.
And so what is that spread right now, the difference between the variable and the fixed? Say on a 5-year, the average human being trying to buy the average priced home in Calgary, which is, 600 and whatever $1,000 that is, somebody with decent credit, like just that average human being, what is the spread between a variable and a fixed right now?
Yeah, so let's do high ratio just because that
Okay.
tends to be pretty the norm, I guess. So less than 20% down payment.
Yeah.
That rate on a variable, you're around prime -1.
Okay.
So right now the variable is still 695. How it works is the overnight lending rate comes out, then the prime lending rate has to change, then the banks have to follow suit. So
Right.
let's assume this quarter point drop translates all the way through. So we're at 6.7 now. You take 1% off. So now you're at 5.7.
Okay.
On a high ratio fixed 5-year, you're around 469. So
Yeah.
you're still 1% higher,
Yeah.
which is a lot in payments and a lot in qualifying. Again, depending on the borrower.
Well, and prices have gone up so much in this city in the last 4 years that, 1% is massive when you look at the size of the mortgages now.
Yeah, it's funny. I don't know who I was having this conversation with the other day, but a client that I had pre-approved like 2.5, almost 3 years ago. And then compared to today, because not only did we see house prices go up, but we saw rates go up over the last few years.
Yeah.
And it was like $250,000 less that they could spend
Wow.
from before. So that's why I know we talk about it all the time. I know you talk about it all the time, but it's like getting into the market is just so critical because you never know in 2 or 3 years, like what you could spend then might be a lot lower than you can now. And that affects people buying. So
There is the old adage that those who wait in real estate lose. Um, you know,
unfortunately, I wish it weren't that way, but
but it
it's
is. Yeah.
definitely,
Just
yeah.
over the long term, anyways. I mean, there's short-term wins and losses, but over the long term, traditionally in the last 25 years in this market, you've done very, very well in real estate. If you've been in the market and held on, for sure.
Yeah,
You've done extremely
100%.
cool. All right, we're on with Danielle Di Marco, co-owner of Mortgage Line. Thank you so much for coming on. So the message today is if you're in a variable rate mortgage, you're starting to feel a little relief today. You're feeling a little bit better about yourself. If you're in a fixed rate mortgage, it's not really going to affect you, these rate cuts.
Not yet. Not
Okay.
a ton.
Awesome. Okay, well, you go field more of those phone calls. I know your phone is ringing off.
Perfect.
We always appreciate chatting with you, and we'll chat with you again soon.
Thanks for having me on. Appreciate it.